Hello, this is Manish Patel with IMTF Trade. Today is September 3rd, 2018. I want to welcome everyone to this short little video on talking about the U.S. market, talking about where we're at, the markets are today, and where we're looking to go in the next couple of days, a couple of weeks, the next couple of months. I want to wish everyone in the U.S. happy Labor Day because today is a holiday. Typically, here is a chart here that you see right now. This is from TradingView. You guys can see the disclaimers up here in our email too. This is the E-mini S&P 500 futures. If you guys have listened to our videos, we typically look at the E-mini S&P 500 futures, and then we progress over to the other indexes, and then we also look at the VIX, the volatility index, to kind of see exactly which way the markets are going and go from there. And the reason why is that typically not one product can give you an indication of which way the markets are going. You have to kind of look at all the products and see if they're in sync and so forth. So what we typically do is we look at the weekly charts at the E-mini first, and then we evolve into the VIX, and then we look at the Nasdaq, Dow, and also the Russell too. Typically find that right now the Nasdaq's been leading the market since the financial crash in 2007, 2008. So we'll definitely look at the Nasdaq too, but we look at the E-mini S&P 500 futures, reason why that encompasses a lot of the key companies out there in the U.S. stock market, and that's kind of reasons why we look at that first. Okay, so here's the E-mini S&P 500 futures. You could see here on a weekly time frame, this is weekly, so it kind of gives you a forecast for the next 2 to 4 months. You could see that we are making an all-time high, and you'll notice that in a lot of the U.S. Indexes, we're making all-time highs. There's no past resistance at all, so we can't really use past resistance to determine exactly where we're going to go. The only thing you can do is use Fibonacci retracements, and that's kind of what we're going to do here. So I'm going to mark off the Fibonacci retracement from here to there, which is a pullback. I understand this is a little spike there, but I typically will do that there. So you could kind of see the next major resistance that we're heading towards is going to be this level right here, which is about right there at roughly about 29.72 is the next major resistance for the E-mini S&P 500 futures. So that's kind of where we're looking at now. If you're looking at supports, we have a multiple time frame support right here, which is right here at 28.49.50. That's a long-term support. What we'll do is we'll quickly go down to a daily time frame to kind of see exactly what the short-term supports are. And you could see here by enlarging this chart here, you could also see here that that support is still valid here too. So this support is kind of the critical one that's keeping the market afloat. As long as that's there, then basically this market should still keep on going. There's a minor single time frame support, which is roughly about right there. But that's minor right now. It may turn into a multiple time frame support later, but that's a minor one right now. So that basically concludes the E-mini S&P 500 futures, and you could kind of see where that's going. Let's now go look at the VIX index. Here's the weekly chart for the VIX index, and you got to see that we've kind of marked off these little zones here. And the reason why we marked them off, these are long-term zones here. Remember, the VIX is directly inverse relationship to the market. So if the VIX goes down, the stock markets go up. If the VIX goes up, stock markets go down. And we have two little zones that we've marked off. This is the bottom zone here. This is when the markets are definitely bullish trending. So you have to get below the support here to basically say the markets are definitely bullish trending. If you're in the upper zone here, this basically means the market could top out and go for a pullback. It could be a major pullback, it could be a medium pullback, we don't know yet, but you have to kind of wait to see what happens here. But we typically will say that if you break this resistance here, then we're going to go for a major pullback. So right now you could kind of see we're at this major support level right there at 12.26. So we're at a major level right now, major support. We have to kind of see exactly what's going to happen this week to kind of go from there. If we close below that level here, then this market definitely is going to go higher and keep on going higher, and we'll enter a really good bullish phase in trending. If we hold this level here and start to go up, then we do have a possibility of where the markets will consolidate or may eventually enter a major pullback. Now let's go look at the daily time frame real fast to kind of see exactly where that's at. You could see on the daily time frame, this support right here has been holding for a while, for the last couple of days. We did bleep below here. We didn't quite get to our support level here, right there, but we did kind of get to this level here, very close to it. But we basically were entering full bullish trend here. Then we came back up here. We held this resistance right there and so forth. So the way we always look at things is we look at things at these boundary conditions, especially when we get there. So we're at a critical point right now. So the next couple of days are going to tell us exactly what's going on. If we're below this support right there, then we basically have a lot of long-term bullish positions on. If we're above this support here, we're playing it very cautious. We're taking profits on the long-term bullish positions, and we're looking some short-term bearish positions to trade from this support all the way back to that resistance. Those short-term positions can sit there and turn into long-term positions if we break that resistance level. So that's pretty much how we play the VIX and the stock markets. Here's the Nasdaq futures, and this has pretty much been leading the market since the financial mess in 2007, 2008, and that's kind of got us into this bullish mode. And you could see the Nasdaq is definitely leading the markets higher too. I know that you could see the E-mini, but this is the guy that's pretty much been leading the markets going forward. And let's do a Fibonacci retracement here, and you could kind of see that we've blown past the 1.6% retracement here for Fibonacci extension. So we're gone past that now, and we're going over to the 2 level, which is a lot higher. Let me quickly manipulate this so you could see exactly where that 0.2 level is going to be. That's the next major resistance for the Nasdaq, which is going to be pretty much way up here. So you could kind of see technologies going out there. Now, just because we give you these resistance levels does not mean it's going to go skyrocketing up there. It may take a couple of days, may take a couple of weeks. We don't know at all. All we know is this is the next major resistance. That's basically what we're looking at there. The major support, the multiple time frame support, is going to be right here for long term, which is right there at 71.20. So it's pretty much as long as we're above that support level here, we still have a high probability getting to the 79.29 level there. Let's go look at a daily time frame to see if there's any short-term support resistances in here. And you can see that's the major one, but there is a minor support in here, which is roughly about right there, and you can see all these crosses there, which represent multiple time frame supports. So you basically have a major support around 74.76 before the long-term support down there. So as long as we stay above that level, then we still have a high probability getting back there. So based on the VIX, I think what we're kind of expecting is maybe this month or next couple of weeks, especially till the halfway into September, since it's Labor Day, we kind of get a little pullback. We kind of need a pullback, some type of minor pullback or medium pullback in order for these markets to go up all the way into Christmas until the end of the year. And that's kind of what we're looking for. Typically, you get that pullback in August. We really didn't get much of a pullback at all because we kind of held this green line here, support there. But we're expecting in August to kind of come back all the way to the support, which didn't happen. So we're still expecting a support there, even though we have a long-term positions there, but we kind of waiting for that major pullback, minor or medium pullback to occur before we start allocating more cash into the market for long-term positions to the end of the year. Let's go look at the Russell, because that's typically the laggard. You could see here, this is the Russell index here, and you could kind of see here that the Russell is no longer a laggard. It's caught up, and it's actually making a move that's higher, along with the S&P, Dow, and Nasdaq. Let's quickly draw the Fibonacci retracements here. Actually, I didn't draw that correctly, so let me redo this here. I'm going to do that there to there, and you can kind of see we're sitting right at the 1.6%. So this is turning out to be a little stronger, the S&P 500. Reason why a lot of the small cap companies are running, especially since the dollar is stronger. A lot of things going on in the U.S. side, which is basically driving the Russell a lot stronger than it has been before. And it's kind of a little more powerful than the S&P right now. Reason why, as you saw, the S&P is just getting to its Fibonacci retracements of, I think it was 0.5 and 0.618, whereas here this is now pretty much right at the 1.6% and does have a target of coming eventually to just like the Nasdaq, which would be roughly about right there. Okay, so the Russell is caught up compared to everything else. Let's quickly look at the Dow. Here's the Dow futures, and this is an interesting chart because if you notice this is not at an all-time high right now, the Dow mini futures. So you could kind of see here, we're kind of right at this point right there. So this is the laggard right now compared to the Russell, which is typically lagging. So you can see a lot of these big companies are lagging right now, and you can kind of see that's the major resistance there, which is the all-time high right there, and the support is right there at 25.4683. So we're definitely going to be watching the Dow to see if there's any weakness going forward, and definitely we'll be watching both the Nasdaq and the S&P and the VIX on the long-term basis. But the short-term basis for pullbacks, we're definitely going to see if Dow gives us any signals of when the market could sit there and go for a pullback and so forth. If you guys have any questions, you're more than welcome to email us at info@eiicapital.com. I hope you have a nice holiday and a good week.